Hey guys! In this video, I will talk about the home buying process and what it's like for me as a millennial who just recently graduated from college and doesn't really have any practical or theoretical experiences with, buying homes or understanding how mortgage rates and interest work, things like that. And I hope that this video will be useful for some of you guys out there who are total beginners. First step is picking the right lender that you want to work with a lender that you fully trust, or that person who is completely reliable, consistent, and could get you the best deal possible. A lot of people would, I think, advise you against going with big banks. I would say do what's best for you. I didn't go with Chase, but I did like the interest rates that they were providing me with smaller companies, just because they were located in Georgia. They literally and they were connected with me through my real estate agents, and I just feel like completely safe with that person. And that person also speaks Vietnamese, which is my native language, and that person could, work with my parents, etc. So it was a good package in general. So before you get into it, try to ask them if they can run like a soft credit check, and kind of like try to get as much information as you can from them before making a commitment. Even if you do make a commitment to it, keep in mind that once they open your profile and they do hard credit checks, I think under federal guidelines, they can do this within, I think, 30 days at least. So decide the time frame in which you want to buy a home and in which you want to have your credit, being investigated, and make sure that it follows under a timely manner. When it comes to, buying a home, I really focus on the interest rates. So once, you work with your real estate agents, you find the home that you like, then work on get that pre-approval letter, because you need that in order to look at homes. And there's two reasons why you want to get that pre-approval letter. One, a lot of times they just won't let you see the homes because they want to see that you financially could afford this. And the second reason, tying to the first one, is really showing that you have a substantial amount of commitment to buy this home. Fight your way and just make sure that the number is really low. I would recommend anything below 3%. Some of my negotiation skills is one, let your lender knows that you have options and that you've talked to a variety of companies and that they're willing to give you the most competitive rates. That's what I did with my lender. I told him that, hey, full transparency, I'm working with you, but I also have a couple of options in mind, and it would be great if you can give me the best options, because I'm not in a hurry, and if this is not competitive, I'm sorry, but I have to go with someone else, because I'm not paying like an extra $150,000 just to get this house. So that's something I recommend you, like, let them know that you got options, and then you're not settling if this is beyond what you want. The second thing about buying a home and interest rates is that knowing the point system. So how the point system works is basically your lender is going to give you an interest rate, let's say it's 3%, right? But you can also decrease the percentage if you buy points in the form of dollars to decrease it. So without you paying extra money, it's 3%, right? But they may offer you this deal. If you pay $1,000, they'll decrease it by 0.025% down. So it'll be 2.85%. So basically, you're paying for your interest rates to get lower, and usually this is like $1,000 or less. Or there's some kind of like formulas to it. It's like it has to be less than 1% of the house you're buying. I mean, there's some weird formulas, but think about that. I think there's pros and cons to that, and you have to do your research. And not only research, but you really have to sit down, calculate this yourself, and see which one you save more, right? 3% within 15 years or 30 years versus paying $1,000 now, but for your mortgage rate paying, it's gonna be 2.85. Which one's better in the long run? Go through extreme scenarios, like what if you had to pay in 30 years? What would that look like? But hey, what if you got an awesome job and you only paying your mortgage for the first 15 years or 10 years? For the first one I got was 3.15%, and they said that if I pay $800, it'll be 3%. And I think that was a good number because, again, I want to pay really low. But I wasn't really happy because at that time, interest rates were just dropping at a historic rate. And I was like, oh, this is too high. So I talked to my lender and he was able to get it at 3%. And if I'm willing to pay $500, it would be, I think, 3.875, something like that. So yeah, and keep in mind, a lot of people don't tell you this, but you can negotiate the money you pay for those points. So at first, I think he offered to me for, I think like $800 or something like that, and I was like, nope, this is too high. And I was able to buy points with paying only $500, which I think is really good because a lot of times people pay like $1,000 for this. Okay, so my third advice, and something that I didn't really understand but I learn as I go, is know that there's different options when it comes to like locking your interest rate. You can't lock it now, like just lock it. You're happy with this. You want to avoid, unexpected events, uncertainties, etc. So let's say that you got a house for 2.75%. It's good to go. Or you can do the float option, means that you're not gonna lock down this number until like it gets closer to closing date, maybe like 2 or 3 days or 5 days before closing. This is risky, but if you think that if you have some kind of like super insider's information, or you could really predict the future and you know that interest rates is really gonna like hit bottom in the next few weeks, you should go for that option. And then this third option is float down option, meaning if it gets higher, it's fine, you stick there with the original one, but if it gets lower, you're gonna be locking in with a lower one. So talk to your lender about all these options and see which ones that they have available and which one you can negotiate with. Like, you're in charge, you're in power, you're the one who's giving them the money in the long term, so just don't be afraid to be a bitch.